We're using this video to basically update our followers on YouTube and Facebook as to what is happening with some shares that we've been trading recently. This is the chart for ITV, which we've been short selling. We have a head and shoulders here, and we basically have performed a couple of videos instructing you to sell this. You have the left shoulder, the head with a miniature double top involved, and we are forming the right shoulder. We believe that if there is any rallies, it'll probably go up to a maximum of £1.80 per share, which will be a very good entry if you can get it. But we do think there is a good potential that this can just trickle down to 167, because that's where the midline is for this head and shoulders pattern. If it breaks that midline, which we anticipate that it will, possibly nearer results, then we do anticipate 155 pence per share. If that fails to hold, then we will get 130 on ITV. The next chart is an update on Tullow Oil. What we've experienced in Tullow Oil is we've been posting, I think, 2 videos, basically saying we think we're at a bottom because we've breached this descending sell line. Since then, we've had a good rally. The price basically has put in a left shoulder, a head, and what we believe to be a final right shoulder for an inverted head and shoulders. It must get above the 200-day moving average, which we think will be a catalyst to a breakout. So we do have a price target, which we are very confident that we will get on Tullow Oil. If you click the link below this video, there's going to be a few links on this video, basically for ITV, Tullow Oil, and the following video on HSBC shares as well. But we think that Tullow is a very good buy if you didn't follow the buy instructions when we put them out at around 8.40 pence per share. The final video for this video is going to be based on HSBC shares, which we are still long on. We got you to buy because what happened was we breached this descending sell line, which was a long-term resistance. You can actually see as well that basically what we was doing in HSBC is we was putting in lower lows, lower highs. So the next low would be lower, the next high would be lower than the previous high. However, we got to the lowest low. We then put in a lower high, but equaled, so we failed to put in a lower low basically. So we was thinking that this was a double bottom formation. We also made a higher high. What we did anticipate was a back test of 620, which we got, but unfortunately we've actually broken through 620, which is a little bit concerning because a healthy market would have bounced off of 620. However, at this present time, if HSBC was to turn around and rally from now, what would have happened is we would have put in a higher low, which should lead to a higher high, which would get to our price target of 6.40 pence per share on HSBC. So that's basically what we anticipate happening. It is not over yet for the bulls. This is potentially still a double bottom formation. It's just drifted a little bit lower than we anticipated.